Joining us to break down exactly what's going on here is Neoclassic co-founder and managing partner Michael Bucella. Mike, it's great to see you again. Why the sudden collapse is too strong of a word, especially in the crypto world. Why the sudden reset in value? What do you think is going on here?
Yeah, I'm here.
Michael, can you hear us now?
Yep, I can hear you.
It's like a Verizon commercial. We got you. You're good. You're good. It's good.
We're good. We're good. I'm good.
We plugged in the DSL line.
Yes.
Why the sudden reset in crypto value, to Kelly's question?
So we still are recovering from October 10th. And I think the market we have a very sensitive market. They go heavy into doomsday scenarios, narratives. We had a liquidity situation. It created some deleveraging events, and we haven't recovered from then. Open interest is still well below where it was. I would say general speculation has kind of moved away from the tail end of our industry into things like the prediction markets and zero-day options in Robinhood. So I think the speculative part of the market is sourced elsewhere at the moment. The institutional bid came out for a moment because that's what they do. They de-risk, right? You come into an event where you need to de-risk your overall portfolio, and then today, thankfully, we're in a day where Bitcoin's in the black. I'm typically next to a red screen, which I think I currently am. We saw the announcement from Vanguard saying that they're going to allow their clients to trade and invest in crypto ETFs and mutual funds that control or hold crypto. And then Bank of America is saying they're going to allow their advisors to allocate 1% to 4% of their clients' investments into crypto assets. So those two things, along with, Atkins' announcement is incredibly bullish for the part of my industry, which is private markets, developing, building, financial innovation. But he indicated in January of this year, we're going to have an innovation exemption, which allows all the builders in the U.S. to build without being beholden to the existing securities laws, which are really restrictive in terms of innovating in financial markets. So I would say all that to say institutions are edging back in. Retail can change on a dime. So retail can come right back into the market. But at the moment, they're still pretty absent.
We were talking about Circle. What's your point of view on the whole stablecoin industry?
Stablecoins are critical. The stablecoin bill was one of the most important bills for our industry. And I think my face might be freezing in process, so bear with me. But stablecoins are incredibly important for us to get into financial markets and financial markets to get into the crypto industry. I think the ability to transact at the speed with a bearer asset is incredibly important for risk reduction. And I think you're starting to see a lot of innovation in the worlds of private credit.
Right.
The consumer lending market is going to be under certain types of review. But yeah, go ahead.
I suppose where I'm going with this is it a great business model? We were talking about this last hour. If Circle is fundamentally a spread play on high interest rates and the era of higher interest rates is ending, if they lose $100 million in revenue every time the Fed cuts rates by 25 basis points, that's not a great name to have. That would explain why they're back down towards their IPO price, would it not?
If the business model is sensitive to rates, it's sensitive to rates. You have to think maybe a little bit further out into how can they grow into a multiple they were once at. But generally speaking, if you're a NIM net interest margin model, then you are beholden to the rate curve. And so, will I say it's a good or a bad business? It's a great business. It's made a lot of people a lot of money. I think they're still operating, at a pretty decent margin. But if, that rates curve continues to move in that direction, it's going to be more difficult to generate capital. Tether, on the other hand, is an interesting model. It's obviously up for debate. They retain a lot of that margin, and then they sort of reinvest it on their own balance sheet. So there's many different models out there. You have things like Athena, which you're actually in a stable coin that has a basis trade that generates yield. So it's almost like utility in the back end. But stables are a good business, and they're very useful for the financial aspect of crypto.
They're useful. I guess we'll find out if they're a good business. Quick last word, Mike. I know you've got to go. But do you think that this shakeout is behind us now, or has it left people with a bad taste in their mouth about the industry that has, you think, affected where the price can go from here?
Yeah, I have no taste. I'm numb to these types of movements, so I'm probably not a good barometer. I would say generally, any time we have a run to all-time highs and a retracement, you're going to have people that acquired or bought at the top, and they didn't sort of dollar cost average, which I feel like I always say dollar cost average, but they sort of placed their full 1, 2, 3, 4, 20% of their assets into Bitcoin at the peak. And so, yeah, listen, people are going to be scorned by it, but I do think, generally speaking, we're in a good position. There was a lot of deleveraging. The vol in Bitcoin continues to be higher elevated than it was previously because the markets are still fairly thin. And so that's the big risk. The big risk is we don't get the market depth that we had 3, 4, 5 months ago to support those sell-offs.
Right.
But if we keep getting bullish indicators like we did in this, this morning, we should be in a good position.
All right. I like it. Thanks for your take, Mike. Appreciate your time.